I just want to talk first about, it seemed as though that bathware component seemed to contribute a lot to your sales. Where is this trend going, and what is happening in this space?
Traditionally, I think Italtile has always been seen as a focused retailer of ceramic tiles. And a number of years ago, obviously, we ventured into the bathware market, sanitary taps and the like. And we've always felt that our presence in the sanitary market could be as strong as that in the tileware side. And we've made significant effort over the last couple of years to try and get significant market presence in that particular sector. And I think we've made some inroads into that sector itself.
Peter, I want to talk a little bit about your aggressive price strategy that you alluded to in your report, and the rand. Obviously, the strength of the rand having some impact on your earnings. The rand lost some 19% of its value in the period that you reported, and that seems to hurt you a little bit. But still, you had that 38% gain on your sales and import tiles.
We've taken the view that we want to be price leaders in the marketplace across all three brands, and certainly certain cost pressures that come through, the rand being one of them, and obviously the cost of inland transport being another. But we've taken the view that we wish to absorb those prices and maintain our price points and to be price leaders certainly in the marketplace. Regarding the imported tile side, obviously we want to have an exciting offering for the consumer, and obviously there's certain types of products that make us a little bit more fashionable that are not immediately available locally. So we've gone almost in the dual strategy, maintain prices and try to have a very fashionable oriented offering for the consumer.
Peter, the flip side of that, it seemed as though the Australian dollar strength seemed to have impact on your operations in Australia. Going forward, how do you plan to go around this? Not only did you have problems with the strength of the dollar, there was also severe competition in that space, and it seems as though the growth that you had in that in Australia was actually quite negligible. So going forward, what do you intend to do?
Well, Australia, we've been trading there for almost 11, 12 years now. Doesn't make a significant contribution to the group's profits. Most of our business efforts are in sub-Saharan Africa. So although the trading conditions are very difficult in Australia, whatever happens in the environment going forward will not have a significant impact on our projections going forward.
Peter, then are you then going to continue operations in Australia if it's that difficult to trade there?
As long as businesses make money, we will retain with it. We'll stay with them. All our business operations are profitable. It's taken a while to establish the presence. We'll grow the brand there slowly but steadily. We've never had the view of exiting any markets. So we'll maintain our presence, but I think growth will probably come from our third brand in South Africa, and probably more growth opportunities from our sub-Saharan operations.
I want to talk about your sub-Saharan operations. You're operating in 7 countries right now, 7 other African countries. You plan to expand to Nairobi, Kenya next month, but you say that infrastructure problems seem to be hampering your efforts there. How are you working around that?
Well, I think it's probably true for most retailers. If you have a consistent, reliable supply of stock into your stores, you can sell. The market exists, the product's attractive to the consumer. There is strong demand there. But the challenge, of course, is to get regular and consistent supply to the stores. The infrastructure doesn't exist as it does here. So supply has proven to be erratic, but it will force us to be a little bit more creative and perhaps start putting some distribution centers in East Africa to ensure supply. But the challenge is there, and I think we're up for it.
Peter, let's bring it back to South Africa. You've talked about investing particularly in green products when it comes to progressing your brand and your tiles and everything else that you're offering. We have seen new energy laws in South Africa. Are those going to impact, or how would they impact your business going forward?
Well, we've taken 2 views. One, we're starting to green all our sites. We need to reduce our energy footprint for 2 reasons. One is commercially viable to actually do so. It makes commercial sense. And I think we need to be a good corporate citizen as well. So we're going to retrofit all our stores to reduce our carbon footprint and reduce our energy consumption. And I think we need to be cognizant of the fact that the consumer also wants to be assured that the products they buy are green products, particularly in the upper end of brands and the upper end of the market.
It seems as though this industry that you're operating in right now, you were talking about new buildings, that's not that sector of the industry not growing, and then when it comes to refurbishment, there's only steady growth. Going forward, what do you think your earnings are probably, your projected earnings are going to be in the next financial year? Do you think that you're going to have as strong numbers as you did this time around?
I think that we are quietly confident that perhaps we can continue the trend that we've established over the last 6 months.